Greetings, everybody. This is Jeff Scott, and it doesn't look like this and sunny today in Florida. It's pouring, so I thought I'd do a quick top-down review. Called it my May rainy day update. Subtitle: Up, Up, and Away with a question mark. Wow, what a great time in the market. I hope you're making lots of money. I am. I know Gallardi is. This session is for educational purposes only. Anything I recommend is in the spirit of education and not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments, so keep that in mind in anything that I tell you. I am independent of any software vendors or trading companies. That means at some point I pay for everything that I use. And when I say good things about a company, it's because I like their products, I like what they do, and I use them. No one pays me to say good things. Trading involves risk. You and your loan are solely responsible for any investment decisions you make. I like to start with my concept of education, which is to be your own guru, which I learned from Ian Woodward. My point here is I am not a guru. I don't intend to be a guru. I don't claim to be a guru. I want to teach you to become your own guru. I learned from Canslim O'Neill, improved by Morales and Catcher, taken to HGSI software by Ian Woodward and Ron Brown. George Lee, a great trader for the Pacific Northwest. Dan Tharp, the father, grandfather, and king of money management, position sizing. And my friend, mentor, and great guy, John Person, who's an author. He's got some great indicators, some great trading systems. Really enjoy spending time with John. I'm going on a trading cruise with him and a bunch of his followers in a couple of weeks. He's got some great stuff. And what he really did is I learned about the market. I learned how to find great stocks on the left. It's really between Van Tharp and John. I learned how to trade them and make money with them. It's more than just identifying a great stock. You need to actually know when to hold them, when to fold them, how much to buy of them. And I learned that from John. I have a lot of software. You'll see that when I go off the screen. What do I need if I have to actually cut back? I need TradeStation or Thinkorswim. Genesis is wonderful for futures, not necessary, although it does have some great scanners. I love HGSI for my analytic work, supplemented by EdgeRater. Yes, at times I do seasonality. This is not typically a part of the season that I get a lot of help of the year with seasonality. And then I use a number of different websites, and someday I should update that. One day, maybe I'll even talk about some of the places where I go on the weekend to hear what people have to think. Here's the HGSI website. I point you out to the free 30-day trial. It doesn't even require a credit card. If you subscribe and you get lost, you have a couple ways to learn. You can go to Investing Strategies, where you'll see hundreds of my webinars and Ron Brown webinars and a few others that will teach you how to use the program. Or you can also email me and I'll send you some dated but still effective material of how I use it. And Ron has recently done a series of videos of how to use the program. Don't get turned off by the simplicity of the toolbar. It's what's underneath that matters. Stock patterns are cyclical, and I feel like a broken record every time it looks like we're running down, we're taking another leg off. So are we down here and it's time to buy? Or are we still in uncertainty and we're just on an up move? Well, the fact that we broke through downtrending resistance suggests to me that we're on a new up leg. Certainly, I'm much more long than I've been in a while. I'm making a lot of money, as I hope you are. I also have to take in mind that this is late in the tooth for this route, for this market, although I'll show you something at the end that says we might have some further to go. One of the guys I like, CCM, is the name of his company. He actually put out a video this weekend that suggested that we're still early in the bull. I really like that because I make more money in bull markets, but I still think there's a little caution is warranted. But as I said, I'm very long, but I have a tight leash. So when I'm long, that means I'm buying stocks and calls and selling puts. I don't do covered calls until I think the market's about to top, in which case I'll sell some calls against my positions in case the market rolls over before I can scramble out. And I'll do some bull put spreads where I'll sell some puts out of the money and then buy a put further out of the money just to protect my margin account. So I am long. That's what I'm doing today. If I look at the markets, and I think it's a little clearer here, I changed the resolution up. This is a higher resolution monitor, but it's not 4K. It's WQHD, so it's about 2640 by 1600. And I can actually read these things now, which I couldn't. And you can see there's a smattering of green everywhere. The REITs were red. Interestingly, the casinos were red. Energy, not totally green, but sort of mixed. I mean, it's mixed throughout, but certainly utilities, healthcare, biotech showed a lot of green. And my stock of the week may actually come from biotech. I did see some things I like in biotech now that we're through the Trump statement. Let's go look at Thinkorswim, and I can show you why I'm sort of bullish on the market, and then where some of my concerns may or may not be. Enlarge this. All right, so here is the ES, the E-mini futures. These are the S&P futures. A couple things. They may look a little different than the S&P 500 because a lot of times these bottoming and topping bars occur in the wild west of the pre and after markets, and you may not pick them up. The red are trend lines that I have been drawing in, trying to figure out when we were actually going to break out. And I've been looking at this as the dominant one here and the dominant one down there. And we did break out on Friday above both the short term early in the week and the longer term descending trend line. That has to be bullish, OBV going to the moon. We're in a PPS buy signal. Now we've also broken above the 50 in yellow. Would I expect this to go straight up, or do I think we could retest the 50 or certainly this trend line? Absolutely. It wouldn't surprise me. It'd probably be healthy. But this is a breakout, and that's bullish. At least bullish until 9:30 a.m. on Monday. NASDAQ futures also broke out a little earlier in a buy signal, and they sort of retested the 50 here and then took off. I think they look strong. What am I not telling anything you don't know? The Russell, interestingly, let me see if I get, I don't know why I don't have more. Let's use a different thing here. Okay. The Russells are interesting. As you see over here, a huge run up. Here's a descending trend line hitting the tops. Here's sort of the lows. Here is a 200-day moving average. And we have broken above the 50 and the trend line, again, bullish. And frankly, the Russell's been one of the strongest in the market. And then if we look at this is the Dow rather. The Dow broke above, take that back, not the strongest, but certainly has broken above any area of contention. That was the Dow, previous was the NASDAQ, and here's the Russell 2000, just using the ETF. Sorry for the confusion. Sometimes I should actually look at the charts instead of just opening my mouth. And look, in this, here is prior closing high, and hold on. We are getting, I think we're right up at long-term highs. This is the IWM. I think the Russell 2000 actually closed at all-time highs, but you could see a powerful breakout and retesting prior highs here at 160.93, and we're right below that. So perhaps some resistance here to be concerned about, but the Russell has really blown through. If I look at the VIX is now down below the 200-day moving average, which is good for the bulls. And the dollar has sort of faltered here on the daily. And if you want to hold gold or you want to see oil going higher in other commodities, this is a new sell signal for John Person. That's a very, I think it's a John, yeah, that is a, bearish on the dollar. Now, this is on the dailies. Let's take a look quickly on the weeklies. Sorry for my flub. I do these things. I don't really practice before I do them, so you get me live. Because if I had to practice, it's just not going to happen. It's too much work. And I do this every night for my own work anyway. So weekly, there's my trend lines, E-minis, breakout above. Gotta love that. Closing near the high. NASDAQ, new PPS, breaking out. Dow, same story. Russell 2000. Yep, this one is at a closing high on the weekly. And this is, so we must be pretty close. Well, we're near a closing new high. I can't tell if we're there or not. I think I believe we are at a closing high, although we haven't taken out the prior highs. Russell strong. Here's the VIX falling back into chop, and the dollar failing at the 50, descending 50. I would say the dollar looks like it's going lower. So that's the markets as I see them very quickly. Let's go back into the rest of the story. Rates, this is the 10-year, this is the 30-year. These are, to me, key points where if they close above it, it may put pressure on the market. And we are close, but we've been close for several weeks on both. AD lines continue in white to lead the markets in yellow higher on both small and large stocks. In fact, here's the NYSE AD line. You can see you got diamonds, Qs, spiders, IWM, and transports in here all heading higher. And the TLT bonds are the laggard, which is what you expect in a strong bull. Breadth, stocks above the 200, stocks above the 40 are above their midline. They are not yet at areas that you expect or have to see a reversal. 3-month new high, new low has actually turned down a little bit. It did get into overbought areas. This is one of my favorites of looking at markets turning over, especially when it gets near the bottom. This is a 3-day. I don't know why I have it on the 3-day instead of the weekly, but I don't think it would look any different. Daily McClellan, I look here for aberrations. I look here for divergences. A new high without a new high on the oscillator, the summation index, a new low, extremes. I don't see them on either the daily or the weekly, so I don't really see a signal here, so we'll keep going. The buckets, S&P 1500 as calculated on April 1st, then run every day. I update quarterly to make sure I make up for stocks that come and go out of the indexes. 2/3 of the S&P 1500 stocks are trading above their midline on their Bollinger Bands. That's bullish, but not overly so. 11% above the upper band, very few below the lower band. Strongly bullish, not so overbought that I'm worried. There have been no HINDY signs in weeks, no shocker. This is a very strong market, and you can see the number of new lows on the NASDAQ on the left and the NYSE are too low to trigger to give us any sign. Market tone, the NYSE is lagging a little bit here, interestingly, but everything else is green. This is my Woody indicator, %B going through bandwidth. And if you look at sector rotation, you see staples, no surprise, are the weakest. And interestingly, so is transports. Discretionary and staples are yellow. Everything else is green except for utilities. So clearly, strength has come back in the sectors since I last did this. The canaries are leading the market higher despite a big miss and $100 plus drop by bookings. Not quite to the March of 2018 highs, but a big move in place. These are my melt-up leaders. We like to look at leaders to give us an early warning sign of when the market rolls over. These were the best of the best in the market on January 21st. The vast majority of them have had big moves. Pricelines now bookings. Some are still looking good. Weight Watchers looks good still. Priceline is bookings. I don't know if I said that right. There's a number of stocks here that have held and several that have not. And you can see we are closed right at the 50 on the daily in a squeeze. It would be nice to see the past leaders to pick up. I think the key sign here is that just because they were leaders in the past doesn't mean they're going to be the leaders on the next level, next run up. Know your news and earnings. When I looked at news this week, what I saw was a lot of Fed head speak. We have, on Monday, we have Loretta Masters and James Bullard. On Tuesday, we have some housing, but John Williams. On Wednesday, we have mortgage application. We got some petroleum. And Wednesday night, we got James Bullard, Raphael Bostic in the morning. On Thursday, we got some jobless claims that may be important. We've got some Neil Kashaki speaking, Fed balance sheet and money supply. And on Friday, we got Loretta Masters again in the rig count. So except for the Fed heads, nothing too unusual. Now look at some of the stocks: Agilent, Home Depot, Cisco, Take-Two, Walmart, Applied Materials, and John Deere, among others that are reporting this week. And as I said, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts, another big week in the markets as the Russell closes at all-time highs. Earnings season is winding down, but several big ones are on tap for this week. Healthcare seemed to get through the Trump speech fine on Friday, but likely have some volatility as market sorts out potential plans. Biotech may be poised for a run here into ASCO, which is the first weekend in June. Buying the rumors, all the news often is the reality. Earnings season has truly saved the bulls with a marked drop in volatility, but those that miss expectations are still taken out to the woodshed and shot. CWB, Weibo as an example. Lots of Fed heads opening the Jerusalem embassy. Continued increased volatility in the Middle East can bring back volatility in a New York minute. Lest I forget to, and this is what we were doing yesterday. We knew it was going to rain today, so we were out on the boat. This one on the left is my lovely wife, Sherry. Married 32 years, met her on a blind date, proposed 2 days later. I spend more time looking at a stock chart before I buy it than I did on picking a wife, but boy, did I pick a good one. So happy Mother's Day to all you women out there and to those of you that have women in their lives. Make sure you don't forget them. Please join my Discord site. This is a free social media site. I get zero for you joining, but lots of good conversation. I'll post my stock of the week that I come up with today, and we'll do it every week, even when I'm not doing a video. Here is the link, and I will post it on the HGSI board as well. Now, for those of you that don't know what Discord is, it is a social media site. This is our site here. These are the folks that are still online. I don't know why you'd be online today because there's nothing going to be happening. And basically, I have a number of channels. I have a general channel, which just tells me who's coming in. We put some information. Paul R. has posted some things. He's also a big helper for Ron Brown. He's put some of Ron Brown stuff here. I know Ron has been on the board as well. Dave Gallardi, Stock Jaguar, likes to post. We appreciate it. I put in here for questions. Here's some Ron Brown, some of the quick start, how to use his stuff material here, and a number of others. I put on some trades that I was looking at. You can see my HGSI chart. My board rules, they're kind of short, and I want to keep this friendly and open. Again, it's free. Now, Moxie Trader is a system that I've been playing with and using. Everybody knows I'm a big fan of EdgeRater, so I put support groups there for them. And I've asked the proprietors of those, T.G. Watkins for Moxie and Chris White for EdgeRater, to monitor and participate on the board. If people have interesting toss spaces, I'll be sending a lot of mine. They're placed on the board as well. Stock suggestion channel. If you find a stock you like and you want others to comment about it, place the chart, tell us what you're doing with it. And then I'm going to be posting here shortly my stock pick of the week. This is a total freebie. I'll be putting some HGSI basic stuff up here as well. Love to have you join. As I said, it is free. Lastly, now that I don't do these every week, I actually have time to look at things like Twitter. So I just want to comment on these three things that I saw. This is awesome on this earnings whispers. This is put out as a tweet by the company. I wish I could find a way to find it myself on their site. I couldn't see it on their site, but it gives you a nice picture of what's coming out before and after open of earnings for the week. Over here, I love this one because think back to the folks who came to my December meeting. What did I blame, or say it more positively, attribute my nice returns to over the last couple of years, especially 2017 and 2018? Sitting on my ass. And, active trading, in and out, the new trader, that's a lot of work. This is me. I'm sitting here. I got it figured out. I wish. But I like sitting than walking uphill. And then lastly, I saw this by Pension Partners put up, and it looks at longest streaks above the 200-day moving average from 1896. I think something happened in October of 1929. I can't exactly remember what it is, but I think there were brokers dropping out of buildings. So the longest streak was 786 days, 106% return in the market. I think it ended badly. Second longest streak was 84 to 87, 714 days and 94% return. I think it ended badly. As I look down here, I see July 26th to November 2007, it ended badly. There is no question that we've had major pullbacks occur after big bull runs, but we're still far away from being the longest at 471, where we have several in the high sixes and sevens. So maybe it is a ways to go, and maybe that website is correct. So let's go ahead and quickly go through my top-down review. And again, let me just comment. I know people, I had a lot of thanks when I said that I was done. And I didn't say I was done. I said I was done doing them every week, done feeling like I had the commitment to do them every week. I want to spend time on my boat. I want to play golf. But when I wake up and it's pouring rain, I'm going to do I'll be more than happy on a monthly basis when and if my schedule allows to come up and do sort of an update. I'm going to use the Discord site to be more available and post my stock picks of the week. But this is what I do. This is what I like. I like this thing too, and so I got to find some life balance here. But this week I'm doing this. Awesome. I'd like to jump into TradeStation just to look at some of my other things. And for those that have followed me, I usually look at about 6 different features on this screen. I look at these red and green arrows. Obviously, green is a buy, red is a sell. These are John Person PPS buy signals. These signals are also found in Thinkorswim. So they're free in Thinkorswim. He sells a wonderful package in TradeStation. The second thing I look for is the color of the paint bar. These are Elder Impulse releases, and it gives me a clue as to whether I should be long if it's green, short if it's red, or neutral for both of those. And if it's blue, it doesn't give me a signal. So the third thing I look at is where am I falling within the envelope? This is an auto envelope for Elder. When I'm above, I have a tendency to track around the envelope but not get far away from it. And when I stick my head below, I usually bounce back in. Fourth thing I look at are these red dots. These red dots tell me the market's had a run and it's getting a little bit stretched and perhaps there's some MACD divergence. And then, in fact, if you look at it, here's your prior high on the MACD histogram. Oh, I didn't just do that, did I? All right, let's try this again. And you could see I'm nowhere close to that prior high, even though I got a new high here. The fifth thing I look at is where am I at my high jump? When I get above 90, I know the market's going to ultimately correct. And then I look at my weekly bongo, which is the third dot down, is a middle dot down here. So on the S&P, I got daily, weekly, monthly buys. I got green, green, and blue. That's great. The red dots are bothersome. I'm within the envelopes, but we can get the red dots for a long time before we correct. We are at 56%. My weekly bongo is still red. I'm fine. This looks strong, bullish on the E-minis. Let's look at the Dow futures. And similar picture, buy. Red dots occurring. 48, red on the bongo. I like the Dow. The Dow futures look strong. Look at the Russell futures. Similar patterns without the red dots, all within the envelopes, getting up to 80%. Like I said, it's been the leader. And notice the weekly bongo has actually started to turn green, at least in this platform, on the Russell. And lastly, the NASDAQ futures, which were down 8 points. I guess, I don't think that means a thing. I know the NASDAQ was soft on Friday. Getting up near the envelope, spinning top, sitting here, but at 60 and red. I think these look strong, and I'm ready to move on to my next picture. Then I go into Woodward and Brown user groups. I think there's a new name for them. I just haven't updated anything, so I don't want to mess anything up that I've been using. I go into Woodward and Brown user groups, and then I hit the warehouse view. They'll pick them up here. I'm going to put a top-down view here. Now, if you don't like this resolution, I'm sorry, I'm not changing it. With this resolution, which is a little greater than full HD, which is 1920 by 1080. I don't have to move anything around. Part of the reason why I wanted to stop doing these was I would spend all my time resizing things. So you can see it's 2560 by 1440. So what do we see? Transports are leading, volatility is losing. Most of the stock groups are up top. Commodities, volatility are down here, dollars down there. This is a good picture if you're bullish the market. Big stocks in the middle. So let's just put on my all right, so this is the list that I like to mark up. And what did I say? I said we're either going to break above or we're going to break below. Notice that some of the spikes down that we may have saw on the futures, you don't see on the cash instruments. But we broke above, that's bullish. We have a couple of kahunas. So we did see a Eureka down here, which is sort of a follow-through day for the HGSI users. So I would say this looks very bullish. I wish the weekly bond will turn green. It will. We're still ways off the high. This is the Hindenburg lines, two different ways of calculating, and you can see there's no recent Hindenburg omen. So S&P 500, as I already told you 14 times, looks good. The Dow, similar picture. The NASDAQ, the same. And then the IWM for the Russell. It's strong. We've broken out. A retest wouldn't shock me, but this is why I'm much more bullish. Look at biotech real quick. What are small caps? That's not what I wanted. Biotech had some overhang with some news Friday, and you can see it ended up closing the day up. I think with a stop here, about 101, maybe put a buy stop above 108. Maybe we'll go look at the LABU if you want to play the IBB. I think biotech is at a place to go higher. We could just do a trend line too and say, it's got a little bit more work to do. But I'd rather buy biotech off of its lows than off of its highs. Biotech looks interesting here. Just my opinion, not without risk. Nothing's without risk. That's why they call it stock market, not stock winning. The dollar, you can see on the EUP, pulled back the last couple of days. Volatility, as we already talked about, should be sitting on the bottom. Gold and silver, which had to deal with a rising dollar. Maybe this is a time for gold and silver to rebound. Here's the gold spider bouncing off the 200. I'd like to see it get above the 50 before I pay attention to it. The silver is worse, has to get above the 200. And then gold miners actually might be the place to be right now, where they broke it. And they tested on Friday the 200. Notice the weekly bond goes green. You had a kahuna on gold on Thursday. I'm looking for gold perhaps to start to make its move here. U.S. oil, especially if that dollar remains weak, has had a big run. It will benefit from a weaker dollar. It will also benefit if there's still missiles being lobbed between Israel and Iran. Probably also benefits from the Iran sanctions. All right. That's enough of looking at the market. Then I go to 0.07 industry groups, hit warehouse view. You can see I've got 173, and I'm going to go to force index up. I got 65 to the upside. Make sure I'm ranked by raw combo. I have to the downside, I have only 18. Let's look at them. Software, oil, gas services, semi, gaming, tobacco. A lot of things that have been doing well, refiners, made it to the negative list on Friday. There was profit taking is my guess. If I look at the 5-day ups, there's 73, and a lot of those are going to be sitting in here. And then if I look at the 5-day down, tobacco's been weak. Airlines, I think ever since Southwest engine blew up, have been tough. Insurers, home builders, generic pharma, private equity. All right, so I like to go where the money's moving. So that's fourth. And let's take a look at some of the top ones here. I right-click on consumer electronics, change the index group. And when I see this right away, I get a little bit nervous. Only one group is above the index. I usually want to buy the groups that are beating the index. It was up 40% in one day. They make chips for Sound and others. Let's see if this looks like it's a buyout. I don't know anything about what happened here. That's a very impressive day, obviously. Let's go and put in the web view. Perfect. Oh, I want the no VSA. So you had a big kahuna and a breakout. So what was the news? Was this just an earnings beat? They changed their name to here. I missed that part. Not that Eternal Beat. Here is the new. Okay. Blowout quarter one, multiple tailwinds. Stock explodes on craze. There must be some. Who knows what it is? Well, that's interesting. Probably too far gone for my taste. And that brought up the whole consumer electronics very quickly. Let's see if anything pops out. GoPro, I'm not going to buy that no matter how good it looks. I want to look at Control 4. A lot of us have it in our houses. Somebody had asked me a question about it. I like to see it get above the 200. I prefer buying stocks in an uptrend. It's too short to say it's an uptrend. I would pass. So, consumer electronics is driven by a story. We'll skip that. Biotech. Now, I made a comment that biotech may run into ASCO. So many of these companies are driven by their cancer news. And there's a simple reason for that. The pricing power that you get with oncology drugs is absurd, $150,000 to $300,000 per patient. So the ASCO meetings, which are on the first weekend of June, are when people present their most recent data updates. So this is a typical biotech story. Regeneron's a big stock. It's got a number of good products in the market. Some are marketed by or co-marketed with Sanofi. And as you can see, this is a stock that's really been in a downtrend forever. And is it about to take off? Well, you got a Morningstar like high close doji for sure. A pocket pivot, Kahuna's a mobile breakout. It just came out of its squeeze. It's got a lot of overhead supply. All these people up here are thinking, I want to sell as soon as I can get back to even. So I think it might be an interesting bottom play. That's not my stock of the week because it's certainly not an uptrend. Biogen IDEC, kind of the same story, but it's actually already broke above the 50. And I think this probably runs 20 points easy up to the 308 range, 310. And then we'll see mobile breakup from a squeeze, pocket pivot, Kahuna. Celgene, someday the stock's going to turn itself around. I'm not sure if today's the day. It's got a growth rate in the low teens, a multiple in the low teens. And it's struggling down here, probably make some acquisitions. And like many of these companies, they do really well until some of their major drugs generic or get risk of generic. And this is a company that has been a big leader for a long time. And I was a big bull of Celgene for a long time. I'm not in Celgene right now. I'm a little nervous about it because I like to see it get some products that are going to have sustaining power. Their big drug, Revlimid, is a really big drug, and when it goes generic, it's problematic. Amgen, again, another beaten down biotech with a Kahuna and mobile breakup from the squeeze. Vertex, a little bit better. Clovis, but you look through, it's hard to get excited by any of these. Dynavax, I don't know this one from Adam. It doesn't make money. At least it's above its moving averages. So, if I had to buy one, it's pretty simple to me who that one is. Here's going to be my stock pick of the week. I will mark it up on where my buy points are and my stops and stick it on the Discord site. I like Bluebird Bio. I like it for a number of reasons. It is in the CAR T family. Celgene is highly likely to make an acquisition. The acquisition's probably going to have to be close to the high back in March, which is in the 240 range. And it's expensive there. It's very expensive. It broke above its 50 on Friday. It had pocket pivots, Kahuna mobile breakout from a squeeze. Of course, it doesn't make money. It is a pre-market entity. I like it a lot. The earnings are out already. I expect good news to come from Bluebird Bio. At the upcoming ASCO meetings, they've got a number of shots on goal in gene therapy. I think they're one of the next big ones to be bought. I'm a fan, Bluebird Bio. Now, the easier way to play these is just to go long LABU. And as I mentioned, LABU, I like to buy when it's cheap. I buy it here, sell when it gets to 115. That's about a 40% move. You had two kahunas this week out of a squeeze. I'm going long, if not already long, in LABU this week. The news is behind it. All right, that was fun. Specialty pharma, some overlap. I know a lot about Supernus. They got some newly marketed drugs. They had great earnings this week, surprised everybody, and you could see what the stock has done. Big Bible gap up on Friday. It's expensive. You're chasing it a long way, up $12 in 4 days on a $58 stock. It does make money. It's got earnings per share coming into the stock. Revenue's going up, probably the beginning of the run. You could also look at it and say, gee, it just had a big cup and a handle and breakout. Supernus, I'd rather buy it if it pulled back, but I think that one should be out of your list. Don't know Omeros much. They don't make money yet. It's a newer company, broke above the 200. Love the pattern. Don't know at the bottom. So, of course, I could do more info from the web. FinViz. And what's it going to tell me? Up on earnings. Breakthrough designation. Oh, it must have a product on the market. I just don't know it. All right, so that actually looks interesting, and it's not going away. So Omeros. Valiant, changing its name. This used to be kind of like Celgene, a big growth story. Remember that little, I always talk about the pattern that repeats itself? Well, went up and came down pretty darn fast, didn't it? Is it going to go up again? There are a lot of neat assets. I think it's chasing its name somewhere on Bausch and Lomb. Makes good money. It's no growth. I have a position in it I bought in the teens that I just forget about because I think there's a lot more value than is expressed, but it's not buying it because as anything but a lottery ticket. Prestige Band Holdings, I think that makes some of the over-counters. Not that exciting. Jazz, this may be the best example of what happens to companies with bad behavior on drug pricing. Mallinckrodt bought Questor. Questor had a product called Acthar Gel. Acthar Gel is one of those products whose price went crazy. And ever since they bought it, they've come under scrutiny. And you could see over the last 3 or 4 years, this is kind of valiant looking from the 140s down to where it's at today. Not quite in single digits, but still looks pretty ugly. Down here, about $15 a share. That next to it down at Internet Media, Facebook. Wow, was that a trap or what? I actually sold some shares because I got nervous. But Facebook has had a big rebound, getting back towards all-time highs. Let me tell you, best toy I ever bought. Highly recommended. It actually was in our local paper. $200 virtual reality with 4K. I wasn't disappointed. I love this thing. Oculus Go. Not convinced yet on battery life, but wow, I love it. And that's a Facebook thing. And I think they're like Amazon. If they ever want to really make money, they just got to turn it on. Good earnings per share growth, rebounding. I think it goes to 200. Then again, I thought it went to 200 before it dropped. IAC Interactive, pull back. And it's hard to buy this. This is just a bounce. Google, slowing down earnings per share growth. Baidu's got earnings are out. Okay, I thought that. Baidu's at a multiple top. See if Baidu can get through there. That might be interesting if it does. Or Google. Twitter, I mean, if you want to buy Twitter, you're buying it in a squeeze, a little bit above the 50. That might be interesting. I like using it. I got burned when I owned it, so I don't own it now. All right. So I found a couple things I like so far. Large pharma, again, the news is out. Merck should be a big winner of ASCO. They've got a drug called Keytruda. I think Keytruda is the star right now in oncology care. And I have high hopes for that drug. Broke above its descending 200-day moving average with a pocket pivot, a kahuna, mobile breakout, weekly bond goes green, pays a 3.2% dividend. Let's look at it over a longer time frame. Been sideways for a long time. I just think this Keytruda story is fantastic. Pays a dividend. It's the leader right now in cancer care. J&J, downtrend. AbbVie's another one I like. They got hammered because of a drug failure. But it was just a drug failure in a line of therapy that no one's ever worked before. And it's being studied in earlier lines of the same cancer and much more favorable looking. Look at the earnings per share growth here compared to multiple, pays a 3.7% dividend yield. I think they've got some patent risk on some of their big drugs, but I like AbbVie. I've liked it a long time. I'm buying it here off the 50 again. The other one that looked interesting was Abbott Labs, ABT. It might be in a different place now. But Abbott Labs, that's a device company now. Uptrend sideways. I like this pattern a lot, coming out of a squeeze. Multiple kahunas. Also one of my picks of the week is Abbott Labs. IT services, I usually go for the top 10. Don't know what TDS Holdings does, but you're going to see this on my stocks of the week list. Big moves this week. I think it's an IT consulting or IT technology services. Uptrend, sideways, all these pocket pivots, a new weekly bond and it took off. This looks interesting. I probably would have to know more about its earnings per share growth. It doesn't look like it's got any earnings, but that's been a nice move. Integrated oils, it's funny. I've owned EC for a long time. I bought COP when I was at George Lee's meeting, which has had a nice little run. I've been afraid of Petrobras because of the Brazil and the corruption, et cetera, et cetera. But maybe it's time to be thinking of Petrobras. Viable gap up in integrated oil, $16. Good earnings per share coming in, does not pay a dividend. That might be the Argentina one, is it? Let's see. They've got some that focus on Argentina and some that are Brazil. Same company, different. Chevron, it's had a big run up, still pays a 3.5% dividend. I mean, I said several times you needed to be long these. They're no longer in the tooth. Exxon just broke above the 200, pays a 3.8% dividend. Shell, 4.4%. Suncor, 2.9%. Total, breaking out to a new high, 4%. They're all extended. The ones that I own are EC, which I posted months ago when it was 12, and it has had a run-up extraordinaire to 22. I'm still holding it. Good earnings per share growth, dividend, 2.8%. And ConocoPhillips looks like the others at an all-time high. little bit lower dividend yield, but I was still attracted by its EPS growth. All right, continuing on, number 8 is steel raw materials. We saw these guys pick up this week, probably a small dollar play, maybe some of the issues related to some potential tariffs. This is breaking out, but you don't like how it closed. Vale, VHP Billiton, they have the same breakout pattern. Cleveland Cliffs, don't like the close. And the one that I bought, Techminco, one that I've known for a long time and follow for years, and it closed a little bit better. Weekly bongo's gone green. I'm still in it, but with the other closes, I'm gonna have to watch it. But it's still got earnings per share growth, twice what the PE is, pays a small dividend. Exploration production still on. Oh, that's where my Conoco is. Okay, I own a couple of these. I didn't realize that because I forgot to look. I actually have a position in Legacy. I didn't remember if I did or I didn't, and I had a little bit of money on Legacy. It's on a June call. Yes, I've had a good year. I'm up over 1.2 million, and I only point that out because there was a Twitter post that said, all these people who post that know what they're doing or say they know what they're doing, and that somebody posted asking the question, have any of these guys ever made $1 million in their lifetime? That's my goal per year. I need half of that probably to support all my habits, which are boats, cars, and traveling, and paying taxes. But I start every year with $2.5 million. I try and take money out to keep close to $2.5 million in my trading account. So 1.2 plus 1.22 on the $2.5 million start, probably about 48% year to date, and it's only May. So it's been a great year. And I do the same thing, the same standard. I pick stocks and manage them the same way, the way I've been teaching for years. It works a lot better, frankly, in a bull market. We're in a major bull market. But then I sit and I look at some of the other sites on Discord. There are a number of sites that I pay for, at least for a month at a time. And when I see people talking about that they lost money on the year, or they're down on the week, I just, if somebody's not able to profit in a long-term bull market, your trading is weird. I mean, you're the guy climbing up the mountain and trying to solve it instead of the guy sitting on the mountaintop with a solved cube and enjoying the fruits of their labor. I'd rather be that guy. Occidental Petroleum, pure play oil, has to love high oil prices, 3.6% dividend, new highs or recent new current highs. Devon, California Resources, here's ConocoPhillips, looks similar, APC. Guy, these things when they're cheap, these things have all moved up a lot. I mentioned I also have an ownership of Legacy, and this is another one that's had a really nice move. And I just bought it back here on this move here. So it's been a fun year. It's been a fun number of years. I love bull markets. Internet-based securities index. Trade desk, this one had just a huge move. Big Bible gap up this week. Hard to chase that on positive earnings because the earnings coming in here. Next turns that to August. It's just hard for me to chase something like that. So that's the top 10 groups. I'm going to show you my favorite picks in a second. Last week was a great week, and it wasn't as great for me as it could have been because I had a couple of high-profile losers. So I'm doing all right for the year. I've got no complaints. I shouldn't show you all my numbers, but I think you need to know how the person that you follow actually does. Black is a positive week, red is a negative week, so overall it was a very positive week. S&P 500 was up 2.41%. The IBD 50 was up 1.92. if I look at my holdings on the prior Friday and I did nothing with them, they were up only 1.74. So I'll take 1.74 every week, but I underperformed this week. It happens. My buys, which were new stocks, were 3.53%, and I got rid of some of the 1.74 and bought those. I was still up, interestingly, 2-1, 31 up, 16 losers. The problem was I had a couple of high-profile losers last week, including gave up a pretty big win on Weibo with its earnings. That one stung me, and it was my own fault because I meant to roll my calls up and out. But a very, very strong week. You can see the Woodward and Brown groups picked on Friday before last weekend, all outperformed and did very well. These are all groups that I still love. And you know, what is my favorite buy signal? Pullbacks, waiting for a signal. That's what I'm going to talk about. And last week, they were up 11 gainers, no losers, 4.66% return. And pullbacks that were already had their signal, 18-3, up 4.48. Those were where the money action was last week, but it was a decent week, even though I had a couple of painful reminders that it's still a market, it's not winning. This point, I'm going to go show you some of the things that popped up on my buy watch list that I'm interested in watching this week. Let me point out a couple of my favorites. The stock works for Oprah, maybe it should work for us too. You had a little bit of a cup and a handle and a breakout on Weight Watchers. Everything's green there. Bible gap up, bubble breakout from a squeeze. Pocket pivot, 2 kahunas and volume coming in. I think Weight Watchers looks interesting here. We looked at Supernus. Lowe's almost made my stock of the week, and I'm going to probably be playing Lowe's. Why do I like Lowe's? I'll talk about it more perhaps in the chat room that I have. But I have a stock that's sitting on support. Okay. I have a stock that had a pocket pivot, a kahuna, in a squeeze, strong group strength, and we're going into a time of year where people do take care of their houses. I think Lowe's is at a good buy point. We got Home Depot earnings this week, which may be important. Their earnings are the 23rd, so that would be a caveat. Like dividend plays, CenturyLink actually had good earnings. This is a stock that's been in a horrible downtrend, although not since December of 2017, and it pays an 11% dividend yield. It had good enough earnings this time that there was a surprise, and the stock had a Bible gap up. That's a huge return. It's been a big return for a long time. I mentioned Bluebird Bio as one of my picks of the week, and we're going to talk about it more on the chat room. Big upturn, upwards momentum. I have a position in Urban Outfitters. I talked about it at George's meeting. It broke out and then went sideways. You know, breakout above the highs around the 41 would be interesting. Look at the earnings per share growth versus the multiple. Urban Outfitters still looks strong to me. You want a small gold stock, this one looked interesting. 3TM Resources, PDG, great earnings per share growth, coming out of a base with a kahuna mobile breakout from a squeeze. And why do I like this pattern? It's simple. Here's why. So I would put my buy stop right above the high, say put my buy stop at 735. All right, so if this stock was to trade above the high of the day here, I'd want to buy it. Now, where am I going to put my stop? So this is a little wide because it's a cheap stock. I'd probably put my stop right below the low of this day here, which would be 660. What's this low here? Hold on. 660 will be it. So I'm going to put my stop Now it's a little wider than I would like. It's about 12%. I'd rather have a 5% stop, but I have a very well-defined stop. I could have put my stop up at the 50, and I maybe would do that instead. Because if this stock trades back down to 50, I don't want to be in it. Certainly, if it takes out the recent lows, I don't want to be in it. But I think that if gold firms, maybe we run back up into the 9 range, and that would be a 20%, almost 30% move from here. So I like premium resources if gold is firm. Here's a company I don't know anything about. Pullback, in an uptrend, pocket pivots, kahunas, mobile breakout, squeeze, Bible gap ups. It's got huge earnings coming in. Look at the multiple, some demands coming in. If semiconductors turn around, this might be interesting. This is a Electro Scientific, ESIO. And then anything else here? No, those are the ones that the highlights. Now, you might ask yourself, how can one person follow all those stocks? And I will tell you that's why God gave us real-time quotes and trading platforms. I don't care what the name of your platform is. If it's HGSI, you have the ability to update intraday right here, and you are going to be updating using Think or Swim quotes. So if you have Think or Swim, then you can update intraday. You also can pull them from Alpha Vantage or Google. I like using Think or Swim. Some folks like Telechart 2000. I like Telechart 2000 too. I can't, although it does top-down analysis, and I guess if God forbid George ever decides to retire, George, don't ever retire. If he ever retires, this will have to be what I do my top-down analysis on. But nothing as good as HGSI. And so what I do is I stick my buy watches in here, and I can look for things during the day. In fact, I'll probably put over on this one here. Where I have a lot of my favorite types of, I've got squeezes, I can look for kahunas. What is this? Oh, I'm sorry, I got it on the wrong. There we go. So I can put my list that I'm interested in following. I can look at squeezes, mobile breakouts in the squeeze real time. I can look for kahunas occurring during the day. I can look for Bible gap ups. So I have this as a real-time scanner. I will use this during the day to monitor, looking for signals. But where my money shot is, it really comes down to TradeStation and using the radar screen where I'll have the stocks that I have buy watches on. These are the ones coming up to the top. And I have it on a big enough monitor that I can see all of these. And I'm looking for intraday signals from John Person. I'm looking for squeezes, pocket pivots, Bible gap ups, mobile breakouts from a squeeze. And I'm finding out what to do based upon my signals. And more importantly, I also know when everybody's earnings dates are. So love to use technology to make my life easier. On that note, I want to again say thank you very much for joining. Hopefully I did that right this time. I'm going to cut it off. Thank you. Happy Mother's Day to the mothers and the wives, and especially to my wife and my mom. And I'm going to end with that picture of my boat because I wish I was out there today, but it has been pouring here. We had a great time yesterday, and if I ever decide to do another live meeting, we'll do a day. We can do a day on the boat and actually do education on the boat. So on that note, let's end it. Happy Mother's Day. And you too, Debbie, for letting George keep this going. Goodbye, everybody.